What's up, ladies and gentlemen? Welcome back to Trades and Gains. I'm your host, Max Pitts. And as always, this is powered by Investor Central Club. Use that code SUPERMAX20 to get 20% off your first month off the most actionable and easy to use option software on the market. So let's go ahead and frame what Mondays looked like. You wake up Monday morning and here's everything that kind of just hits you in the face, right? Well, Nvidia, they just dropped $4 billion into photonics. Apple launches a budget iPhone. OpenAI lands a Pentagon deal somehow. And oil spikes double digits. Gold hits near record levels. And the market opens down 1%. And then it goes ahead, gives you the little Michael Jordan shrug, and bounces. If you're confused, good. That means you're actually paying attention to what's going on, because this isn't a clean narrative day. This is a multiple macro variables colliding at once day. And when that happens, price action matters more than the headlines. So let's go ahead and talk price. The S&P 500 opened near a 1% drop and immediately tested the $6,800 level. Now, why is that important? Well, because this is now the fourth test of 6,800 this year. Levels that get tested repeatedly either break violently or become fortified support. So far, it has been holding. Meanwhile, the NASDAQ composite dipped early, but it's now in green territory. The Dow Jones Industrial Average is still lagging slightly, and this is not broad liquidation, it's what we like to call rotation. Energy's up, defense is up, travel is down, and consumer discretionary is softer than an old man trying to get an erection. It's like pulling taffy on a hot day. This is strategic repositioning, not fear dumping. So let's go ahead and unpack Nvidia. They announced a $2 billion investment into Coherent and a $2 billion investment into Lumentum. These are photonics and optical networking firms. Why does this matter exactly, and what the hell is that? Well, because AI scaling has a bottleneck. Data center communication efficiency. GPUs are fast, but moving data between them is expensive and it's very energy heavy. Photonics are light-based communication. Those are faster, they have lower latency, and they're more energy efficient. This isn't Nvidia buying optionality. This is Nvidia securing the next layer of AI infrastructure. Which, by the way, how long have I been telling you guys that infrastructure is the next AI play? It's been almost a year I've been preaching this, and look at what's happening. I don't miss when it comes to tech cycles. I'm sorry. Now, they are not preparing for slowing demand. They are preparing for scaling demand. We saw COHR up 14% and LITE, or LITE, up 10%. That's not speculative hype, people. That's supply chain repricing. Now let's go ahead and make like an NBA player, and instead of traveling, pivot to Apple. The new iPhone 17e at $599 is not innovation driven. It's demand preservation. You get a A19 chip. It's the same family as the flagships right now. A smaller screen, one camera, and slightly less GPU power. Apple is widening the addressable market. Now, why are they doing this right now? Well, because global memory shortages are pressuring margins, consumers are price sensitive, and replacement cycles, aka people buying new phones and that kind of stuff, well, that's starting to slow down. Apple is basically saying, we'll give you 80% off the experience, 80% of the experience for 75% of the price. That protects the ecosystem lock-in. And in this market, cash flow stability matters. The stock's reaction, however, it's muted and slightly green. That's defensive tech acting like, well, defensive tech at the end of the day. Now let's talk about what actually drove our volatility that we've seen through this market today. US and Israeli strikes on Iran. Tanker traffic in the Strait of Hormuz halted. Qatar LNG production also paused. Oil spiked aggressively overnight. Brent went up 13% briefly. WTI is up strong, and European natural gas is up 45%. That's not noise. That's what we like to call an inflation risk. And inflation, well, risks, they impact bond yields, rate cut probabilities, and tech multiples. Treasury yields moved higher this morning. Why? Because if oil stays elevated, inflation expectations rise as well. If inflation expectations rise, the Fed stays tighter for longer. And if the Fed stays tighter for longer, long duration assets, aka tech, will go ahead and get repriced against their will. This is what we like to call a chain reaction. Now here's where things get interesting. Anthropic reportedly refused Pentagon demands around model usage for surveillance and autonomous weapons. President Trump cut off their government contracts. Then OpenAI lands a Pentagon deal. Sam Altman says guardrails are similar, but make no mistake here. AI is now a geopolitical strategy. This is no longer chatbot competition. This is defense integration, classified deployment, national infrastructure, and guess what's leading today? Defensive stocks, energy stocks, and government-aligned tech names like Palantir. Markets are sniffing out structural AI demand from government channels because at the end of the day, that's what's going to be durable. So back to the S&P, $6,800 has now become the line. Here's what I'm watching into the close. If we hold above 6,800 into the afternoon despite oil strength, rising yields, and geopolitical headlines, that's what we like to call resilience or support. If we fade into close and lose that level, that opens up volatility expansion toward lower support. Sideways compression since late last year has frustrated both bulls and bears, but ranges, guess what? They don't last forever. They eventually resolve like a divorced couple that need to realize they have to raise their kid together. Now, what matters next? Friday, we get the jobs report, expectations of 60K. Here's the tension though. If oil remains elevated and jobs print strong, rate cuts get repriced. The yields will rise and tech pressure returns. If oil fades and jobs come in soft, well, yields drop and relief rally is possible. Right now, the market is recalibrating probabilities. They're not necessarily panicking. They're repricing. So here's the truth. AI didn't slow down, Nvidia just doubled down, Apple's protecting margins, and defense is getting bids. Energy is, at the end of the day, a pricing risk. The market, it opened scared, then it remembered something. This isn't 2022. We're not collapsing, we're just adjusting. The real battle isn't AI versus no AI, it's inflation versus growth. It's yields versus multiples. It's support versus breakdown. And 6,800 is the referee. Stay patient, watch yields, watch oil, watch the close, because when compression ends, the move won't be small. Anyways, this has been Trades and Gains. I'm your host, Max Pitts. And well, I hope you guys have a great rest of your day. We're currently chilling over at Free Wi-Fi Radio over on Twitch. And yeah, use that code SUPERMAX20. Get 20% off your first month of Investor Central Club because we also have a big revamp coming as well. I hope you have a great day, and I'll catch you guys in the next video.